everyone. Good afternoon. First of all, I will give you the introduction of our group members. There are 5 members in our group, who are Cheryl, Rika, Haman, Sunny, and Amanda. Today, we will tell you something about the influence affected by the international accounting in Australia. Our work examines the impact of international accounting in Australia will be affected after the IFRS period, especially on the profit of the accounting income statement of loss. Also, the effect of the adoption on equities assets, surplus and liabilities in the financial sector. We set Suncorp Group Limited as an example of our topic. Suncorp Group Limited is an Australian multinational finance, a banking and insurance company that is based in Brisbane. In 2004, when Australia adopted the IFRS after the decision was made by Australia's Financial Reporting Council, it was feared that the introduction would affect the performance of Australian companies materially and affect their reported earnings. Australian reporting companies are required by law to comply with the provisions of Australian equivalents to International Financial Reporting Standards, AIFRS, for all reporting beginning on the 1st of January 2005. Suncorp is reporting for the first time to comply with the provisions of AIFRS and other comparative financial information. The impact of changing from Australian accounting standards referred to as AGAAP to AIFRS was challenging and expensive. The disclosures are provided for under the Australian Accounting Standards Board 1047, disclosing the financial impact of AIFRS and also assessing the actual effect of the adoption on the financial statements for companies for the period ending the 30th of June 2005. Next, we will welcome Rika to tell you something about the identification of key accounting policies.
Discuss about identification of key accounting policies. The disclosures are provided under the Australian Accounting Standard Board 1047, disclosing the financial impact of AIFRS and also assessing the actual effect of the adoption on the financial statement for companies for the period ending 30 June 2005. The effect include the revisions of AGAAP by application of AIFRS policies. The first one is changes to the requirements of financial reporting, intangible assets, income taxes, property, plant and equipment. And the second one is assessing the accounting flexibility. AIFRS AASB 138 introduces intangible assets to a very strict process on cost to be amortized or capitalized. The change would result on a higher proportion of the cost on application software and other setup cost for different software. These costs should be written off as expense. And now I would like to call my friend Herman, and she will continue with the rest of the points.
To talk about evaluate accounting strategy flexibility. Under AGAAP, combined companies that have franchisee system that often classified as other assets, while under AIFRS, the franchised system would be classified as companies' intangible assets. In intangible assets that are combined under AGAAP, allowing them to capitalize and amortize beside the particular product cost of setting up. Income taxes policy in Australia now uses the balance sheet approach to calculate income taxes balances instead of income statement method that was formerly applied by AGAAP. Next, I would like to talk about evaluate the quality of disclosure issues. There are 3 sub-points in this: employee benefits, property, plant and equipment, and income taxes. In employee benefits, the provision require all the surplus or loss to be recognized in balance sheet. In property, plant and equipment, urgent issue group guidance on recognition of taxes under combined AIFRS framework. Income taxes policy for AIFRS and AASB 112 in Australia now use the balance sheet approach to calculate income tax balances instead of income statement method that was formerly applied by AGAAP. Now I would like to talk. Now Sunny will continue the rest of the part of the assignment. Thank you.
To identify the potential red flags issues in our assignments, the consolidated entity under AGAAP applies the use of cost to record its PPE. It's called the property, plant and equipment, which is also consistent with some of the provisions of AIFRS. While transitioning to AIFRS, the entity may elect to apply the provisions of ASB 1 that allows exception of the previous revaluation, allowing it to be the assets cost. The decision to allow accounting officers to decide the cost basis to apply as provided for under ASB 116 relating to PPE raises a red flag, as the provision creates a loophole that can be abused by fraudulent officers. The introduction of other optional accounting treatments by AIFRS also raises red flags and in the accounting processes, as they may be abused by rogue employees. The next is I'm going to talk about the conceptual framework. It is like we can say that the effect of changing from the Australian accounting from AGAAP to the new AIFRS standard that is expected to be adopted and be operational by the end of December 2005 is actually a great step to the financial world in The financial statement would be only complete if accompanied by relevant notes and also with comparative balances. A clear financial report from AIFRS would also be required under the new accounting framework in Australia. The report would also include a representation on the state of the financial record, as they are required to present a true and fair view of the financial statement as presented under the AIFRS standards. These requirements are provided under ASB 1047, disclosure of the effects of AIFRS adoption. So friend Mahendra is going to talk about the conclusion of the overall presentation.
I will conclude this thesis. The effect of changing from the Australian accounting standard, that is from AGAAP, to the new AIFRS standard that is expected to be adopted and be operational by the end of December 2005 is actually a great step to the financial world of Australia. It would be a good ending for the convergence process, that has been running since 1996. However, there is a great fear in the total system about the new system, which is called AIFRS. But the standards would encourage more investments in Australia because the low cost of the capital that is associated with the recasting of the financial statement and the cost of hiring auditors to go through different sets of accounts to make comparisons. The uniform nature of accounting process makes it easy to compare financial statements from different parts of the globe. The provisions of IFRS would also assist in strengthening accounting standards in Australia. If we see, these references will explain you the clear AIFRS standards from the date of implementation. Thank you.